Don't break a leg, Tim. well, well, thank you, Tim, for that introduction. And yes, so the subject of 2 days is well-being. And as Tim has mentioned, we actually introduced a well-being start this morning by giving you an extra hour in bed. So that is well-being in action. So I hope you appreciate that. Now, yesterday at the buffet, when circulating around, a couple of issues were raised with me by a number of people recurrently in terms of the Scottish Currency Group and what we actually believe in. And I think it would be worthwhile me just recapping rather than talk to each of you individually. We do believe in issuing a Scottish currency on day one of independence. We've always believed in that. I mean, me being a banker, I mean, it's been, you cannot be independent if you issue somebody else's currency. It just does not make sense. And so our policy is to issue a currency on day one by preference. But the point is, and the point we always make to the SNP government, who don't necessarily share our position, is you have to be ready. Even if you don't choose not to issue on day one of independence, you must be ready, and particularly your payment systems must be ready. With 95% of all payments now being electronic, I mean, it's not cash and coins that's the problem, it's the capability of issuing and exchanging electronic transactions. So that's the key thing. And so that's what we always emphasize, to be ready to issue on day one. The other point that was raised yesterday recurrently with me, what is your position on the European Union and the Scottish Currency Group? Now, we all know the SNP, they actually say, vote for independence and we're going to join the European Union and we'll probably issue the euro. We disagree with that because, for very obvious reasons, we don't want to move from a situation where we're dependent and dictated to by the Bank of England in terms of monetary policy to simply transfer that to Brussels. Our vision is that we will be an independent state with our own currency for at least 10 years because we're going to have to run a significant deficit only funded by our own currency, not actually dependent on international bond markets, etc. We'll finance it from our own resources to rebuild infrastructure and to create manufacturing jobs in Scotland and to renationalise strategic industries. None of these things would necessarily be supported by the European Union and certainly wouldn't be financed by them. So it's important that we clarify, well, we might see ourselves join the European Union in 10 years' time, and we might actually issue the euro at some stage. There's a period of migration and reconstructing the Scottish economy that would be best served by being a currency issuer. So that saves me going round everybody and actually covering these things. The other thing I would say is, this is a personal viewpoint, I would like to see the SNP leadership having a different attitude. I'd like to see them having an attitude of, let's go and pick a fight. I think the days... Sorry? Oh, right. Sorry. I think the days of actually being Mr. Nice Guy, we really need to move away from that. We've got Farage waiting in the wings, and we better toughen up our act. And I think we should start toughening it up from today and say, right, we're here to pick a fight, and the fight is with Westminster, and we should be doing everything we can to disrupt the activities of Westminster, and we should be much more aggressive. So yeah, pick a fight. Well, we are here to talk about well-being. I'm not sure that picking a fight is really necessarily well-being, but the thing about well-being is that it's not new. Well-being is not new, and the earliest reference I find to well-being is a son of this very area, Adam Smith. Adam Smith, in his theory of economics, he emphasizes time and time again that everything that he's proposing is for the well-being of the people. Think about that. These two words, well-being of the people. So, he actually saw everything that he recommended, the specialization, was to create additional capability to sell that, to purchase other things that you weren't particularly good at. So how did that metamorphose in the Thatcher years? Yeah, boo. If you didn't live through the Thatcher years, you'll probably have heard of them. Now, Maggie Thatcher, who was loved by the City of London, less well loved up here in these parts. Margaret Thatcher famously, of course, appeared at Church of Scotland General Assembly in the Mound in Edinburgh and said in a presentation she did, there is no such thing as society, only the individual. Now, this is at the Church of Scotland. It quite rightly caused outrage across the country because this was a totally, it demonstrated the difference in ethos between the City of London and the Thatchers and the English people who believed in that and the Scottish people. Even Scottish people who weren't actual churchgoers found it abhorrent that you could have a society where it's only about the individual. Because that sort of concept basically pitches us as rats fighting over a scrap of bread. And of course, that has set the stage for that very person in the shape of Nigel Farage and his Reform UK party, which has nothing to do with the UK. This is an English nationalist party headed by a spiv and a snake oil salesman. Anyway, so let's go back to Adam Smith. It is the well-being is for the benefit of the people, and that really should be the slogan of the Scottish Currency Group. We should be saying what we are doing is for the well-being of the people. So anyway, now does well-being, can we convert well-being or can we apply well-being to payment regulations, regulation generally, and pensions? Well, I think this morning's sessions will actually prove this is the case, and because all these things actually help to the overall well-being of us all. These are very important. And again, well-being itself, I think well-being is actually now hijacked in many spheres, because well-being is actually used by corporations. Many corporations make a commitment to well-being, and actually if you work in some of these organizations, you'd be scratching your head wondering, where does the well-being enter into this? and it's also been captured by many politicians as well. But I think from my perspective, and well-being to actually gain the support and the votes of the general public has to be specified what well-being means. It's a job, it's decent wages, it's access to housing, it's assurance from the National Health Service, and basically freedom from want. Now, where does freedom from want come from? It comes from the original agenda of the Labour Party over 100 years ago. That's what well-being is, for freedom from want. So, without anything further to do, I will introduce the first speaker, and we're very lucky to have Peter Ryan here. Peter actually, I hope Peter doesn't mind me saying this, because when I first had contact with Peter, because my background's in banking and payments, and when I first, Tim asked me to contact Peter, and I didn't know Peter at all, obviously, and I outlined my background, and I indicated what the issues were for payments, and Peter came back to me and said, yeah, I get all that, Ian, but I think you're about 20 years out of date. Which is quite true, because I left the Royal Bank in 2005, and I will tell you, the Royal Bank went down the pan in 2008, so they should have kept me. They should have kept me. But anyway, Peter, I'm going to read this out for Peter, because he's got an excellent background here. Peter is an expert in his field, a homegrown expert indeed, and when independence comes, we will need as many Peters as possible. A boy from Ayr that ne'er a tune surpasses for honest men and bonny lasses. So Peter lives in Ayr. Peter's a senior director analyst for Gartner, a US company, but works largely from home. He specializes in payments. During his 30 years working in financial services, he has coded banking systems. He has worked as a project manager implementing banking systems and has run help desks supporting banks when things do not go to plan. Now, help desks is something quite funny. In the Royal Bank, we always refer to help desks as no help desks, and the very good ones as absolutely no help desks. Anyway, he helped banks with the introduction of the euro and is currently helping navigate the new world of digital money, including stable coins and CBDCs, which I think is central bank digital currencies. That's it. Peter also wrote the original paper, How to Make a Currency for Commonweal, back in 2016. So without more to ado, can I ask you to round of applause for Peter, who will now give us a presentation and 5-minute question and answer.
When my wife explains what I do, she does use a simpler analogy. She says, you know that bit where you tap the card on the machine and then it appears in your bank account a day or two later? Well, he does all the stuff in the middle. Yeah, because that's what I do. But I wasn't planning to go and talk about all the stuff in the middle today. I mean, if someone wants a long conversation about that technology, we could have it. Today, I was looking at payments, and payments are the lifeblood of an economy. You know, without payments, money can't move, businesses would not get paid, you know, you wouldn't receive salaries, you know, governments wouldn't receive taxes. And the ability to move money, to receive and send money, is the most important aspect of money for many people, despite what was said yesterday. This means the design for a currency needs to pay particular attention to payments, and particularly for the resilience of its payment system. This was demonstrated in April when the power failure in Spain and Portugal prevented citizens from making digital payments, and the entire country had briefly to return to cash. Governments recognise this, and this is leading them to take proactive measures to provide payment resilience to their economies. However, payments are not just between people and businesses in the same country. They also occur between countries, and they are how money moves in the global economy. The same resilience necessary for domestic payments is also required for payments between countries. A country that is excluded from international payments will suffer economically, and the countries that control payments can use that to their advantage, in both economically and in geopolitical terms. So this morning we'll take a trip around the world, look at how the US is using payments to increase the US dollar's dominance, and how countries are meeting the challenge of the US dollar. We will look at how the current US administration's American First policy mean that payments are being used as a weapon in economic conflict. Then, using India and Brazil as examples, we will examine how countries leverage the technical change from moving to digital payments from physical cash to introduce resilience in their payment systems and improve their economies. Finally, we'll return to Scotland and explore the lessons we can learn from other nations and how to apply these to inform the introduction of a payment system for the Scottish currency. So let's start with two facts. Currently, 60% of global trade is carried out in US dollars. The euro has 20%, and every other currency has another 20%. And 89% of foreign exchange transactions, that's money moving from one currency to another, involve the US dollar on one side of that. This gives the United States enormous political leverage and is at the heart of its wealth. So how has the US dollar become the world's dominant currency? Consider an export of oil from Ghana to Thailand. Should you price the oil in Ghanaian cedis or Thai baht? To pay for the tanker of oil, you need to have money in an account to make the payment. However, little money flows between Thailand and Ghana. It's not a major economic corridor. So it doesn't make sense for a Thai baht to have a position in Ghanaian cedis. It would just be money sitting there for the odd transaction that happens. So instead, the Thai bank will hold money in a US bank account. And this account is used for payments to any country where there is a low volume of payments. So from a Thai perspective, you would maybe have, a Thai bank's perspective, have arrangements with Malaysia, Singapore, Philippines, local countries to you. But you would need a US dollar account to make payments, the 1 or 2 payments a year to Denmark or Bahamas or Mexico. So you have money held in your bank account, deposited in the US. And what that does is it improves your liquidity because you only have money sitting in one place to serve 80–90% of the world. You don't need to keep having money being moved from country to country all the time. It also works on network effects. A network effect is where we're all using the same thing. So we all use debit cards or credit cards to make payments in the UK. In other countries, you may use different payment methods. And the network effect for the US dollar, what that does is because most countries have banks have accounts in the US, then all the other countries have accounts in the US, and everything flows in the US. Now, what that does for the US is, because the money's deposited there, the banks want to use the money. They don't want it sitting there at 0% interest, so they buy treasury bills or they invest in the US economy. So that's good for the US. And of course, the US banks are making fees from all of this. So, but what that also means that in a world dominated by the US dollar, banks need to be able to access US banking services. And that gives the US power. And that was fine in a world where the US government was stable, reliable, that followed the rules of law. But in a world where an advert on television means that you impose 10% tariffs, it's not really a free trade world anymore. And that is making a lot of countries nervous. Because the policies of the current US administration mean that global trade is no longer free. As the US banking system is at the heart of international movements of money, American sanctions can impact a nation's ability to trade globally, irrespective of whether the United States is involved in that trade. Because remember, the example I used was oil going from Ghana to Thailand. Some countries with limited access to the US banking system because of sanctions include Afghanistan, Belarus, Chad, Cuba, Iran, Myanmar, Nicaragua, North Korea, I haven't finished, Russia, Somalia, Venezuela, and that's not a full list. Now, not all of those countries are fully sanctioned the way that Russia is, but they can be, sanctions can be applied at any time. So that's a threat. And it's not just sanctions that can impact a country's ability to trade. Half of the world's foreign exchange transactions settled through the Continuous Link Settlement Bank in New York. One bank in New York, 50% of foreign exchange transactions. As CLS, Continuous Link Settlement Bank, uses next-day settlement, it increases the speed and reduces the cost of foreign exchange. However, only 18 currencies benefit from this foreign exchange advantage. Payments that do not go through CLS can take days and have commission rates of around 5%. And the example I used of Thai baht and Ghanaian cedis would be that sort of transaction. And the countries, the 18 currencies include Western currencies, US dollars, euro, Japanese yen, sterling. It doesn't include Indian rupees, Chinese renminbi, Brazilian real. But this is not just about the United States. The biggest payment system for cross-border movement between banks is SWIFT. This messaging service enables payments to be made across borders between banks. For example, a bank in Edinburgh can make a payment to a bank in New York, or a bank in Frankfurt can make a payment to a bank in Tokyo. SWIFT is based in Belgium and subject to Belgian and ultimately European Union law. Thus, if the European Union sanctions a country, a business or an individual, they're excluded from the SWIFT network. Now, following the invasion of Ukraine, the European Union sanctioned Russia, and many Russian banks were excluded from the SWIFT network. And as a result, the money is stuck in Euroclear in Brussels. These sanctions make it harder for Russia to participate in international trade, such as getting paid for exports. Indeed, the latest sanctions announced this week by the US against trade in Russian oil through India will probably be effective not because the US can stop tankers going to India. It can't, unless it's going to deploy its Sixth Fleet in the Indian Ocean. They're going to be effective because there'll be threats to sanction Indian companies and stop them getting paid by denying them access to US banking services and Western payment networks. And because the Indians don't want to be excluded from that global trade, that's how the US can impose those sanctions upon them. Now, for this reason, the BRICS countries, Brazil, Russia, India, China, and South Africa, are looking at alternatives to SWIFT. They've seen the power of it. They want to have an alternative in case, so they can maintain their independence. China has built its own KIPS network for global payments from renminbi. And what this is doing is mirroring the US banking services, but doing it in the Chinese currency. And it allows Russia to bypass Western sanctions so they can get paid in renminbi and then move the money into Russia. Now, while this gets around US sanctions, it leaves Russia reliant on China. So if China decided to sanction Russia to exert its economic power through higher fees, then Russia would have few options but to accept the Chinese terms. Effectively, China is looking to replace the US at the center of a global payment network. If successful, KIPS would mean banks in regions such as Africa, Latin America, or Southeast Asia could use Chinese banking services in future rather than US ones. However, many countries don't want a US or China. They want to have their own resilience. And so they're building a series of regional payment networks. In Southeast Asia, you have Project Nexus. This project connects the payment systems of Singapore, India, Philippines, Malaysia, and Thailand, so that money can move between them without the US dollar or Chinese renminbi. Similarly, there's a system in the Gulf region called Buna between Emirates and Oman and Bahrain, Qatar. And of course, in Europe, the European Union has a policy of moving towards monetary sovereignty. Now, part of that is the CBDC, the digital euro, but that's not live yet, so we'll park that one for a future discussion. The European Central Bank has built the euro system for payments. Now, initially, this was a system for the euro, but the target instant payment system, which is part of the euro system, has been designed so other currencies can be used as well as the euro. So you've got the Swedish krona or Danish krona can be processed as part of the euro system. Now, this gives Europe an alternative to the US system and the Chinese system. Now, if Scotland had a future Scottish currency, it could join the TIP system, and it could do payments through there. And what we're seeing is for Danish krona and Swedish krona, within European trade transactions, they're using TIPS for that because that makes it easy to go from Swedish krona to a bank in, payment in euro in Germany or Italy. So that's great, but the Nordic countries are also saying that's great for European cross-border trade, but we also want to have some resilience. They're worried about undersea cables being cut in the Baltic for good reason. So they're also looking at local alternatives. And again, it's for that resilience. Now, the United States is aware of these threats to its dominance. What they're doing is they're looking to introduce stable coins as a cross-border payment. Now, stable coin uses different technology to the payments from bank accounts we're used to. It's a form of cryptocurrency on a distributed ledger, and it allows you to make a transfer in seconds. Most stablecoin is tied to a currency. So you would have one Tether or one USDC, those are two names of stablecoins, which are worth $1. On the blockchain, I could transfer a stablecoin in seconds, so I could do a cross-border payment. The thing about stablecoins is most of them, there's about 260 billion issued at the moment, are in dollars. And those dollars, under the new Genius Act from the US administration, will be in US dollars and backed in treasury bills or US deposits. What that means is it's then exporting the US dollar to other countries. So if you're sitting in Nigeria, rather than holding money in a Nigerian account, you can hold a stable coin, US dollar account. Now that sucks money out of other banking systems into the US. So there is the future of, there will be trade wars about stablecoins in the future, and China and India are already looking to ban them. However, cross-border payment sanctions are not the only sanctions against Russia. As payments have become increasingly digital, technology has also become a method of exerting control over political opponents. For example, following the annexation of Crimea, MasterCard and Visa credit and debit cards issued outside of Russia no longer work within Russia. And similarly, cards issued within Russia no longer work on card networks outside of Russia. So consequently, monetary sovereignty not only means control of your currency, but also control over the technology used to make payments in that currency. Moving to digital payments is good for an economy. Research by the IMF shows that digitizing payments adds 1% to your GDP. So the world is moving to digital payments. But when introducing digital payments, it's impossible to be ambitious and do more than replace cash with an electronic equivalent. A good example of this is India. The main Indian payment system is called UPI. UPI was introduced in 2016. It's a low-value payment system, something like faster payments in the UK. It is part of the Indian stack. They have a technology stack, which included the Aadhaar National Identity Scheme, for example. UPI was developed in India by Indian companies. Not only has UPI protected India from any sanctions on its national payment system, it has also given a boost to its tech sector. UPI works by making an instant payment from a payer's bank account to the recipient's bank account, so between two Indian bank accounts, using a transfer that can be submitted from a mobile phone or through scanning a QR code in a shop. This has helped fuel the growth of the Indian economy, with the percentage of citizens with a bank account growing from 35% in 2011 to 89% in 2024. Part of this was due to the innovation that was introduced as part of UPI payments. For example, in rural India, where internet connection isn't great, you can actually make a payment using your finger. You can make payments offline between two phones. They build the resilience into the design. And the really interesting thing about UPI is banks don't make much money on the UPI payments. It's not about fees. Transfers between individuals are free, and fees to businesses, when they take money in shops, for example, are restricted. And for Indian banks, so the UPI isn't the money spinner. What they do is, because everyone's started opening bank accounts, the money that was sitting in cash in a pocket is now in a bank account, and banks can start to use that to make returns. Similarly, you have a record of people's income and outgoings. So they have a credit history that you can lend to. And that's what the advantage is, both to the economy and to the individual. Now, for the Indian tech sector, UPI has demonstrated its ability to process billions of transactions a year and allowed them to invest in their technology and their people. And UPI is so successful that the actual software is being exported to places like Nepal, Namibia, Peru, so they can build their own payment systems on that software. And it's not just India that's using payments to drive the economy. The Central Bank of Brazil has just introduced PIX. And for Brazil, like it would be for Scotland, financial inclusion wasn't the big driver. There was already 80% of Brazilians have bank accounts, though it has gone up to 98% with PIX. The main goals were economic and technical, to provide resilience to the Brazilian economy and to reduce the cost of payments to Brazilians. Under PIX, personal transfers of money are free, and the fee for a purchase in the store is capped at 0.37%. Now, this compares to 1.5% for debit cards and 2.5% for credit cards. Similar sort of costs to a shop in the high street of Dunfermline. And this has been really successful. Yeah, PIX had 100 million users in 10 months. And it is because the reduction in fees. It was also, they also had the advantage of introducing it in 2020, just as COVID hit and people didn't want to use cash anymore. So there was the advantage there. But from Brazil's perspective, it has a resilient payment system. It has a payment system people use. The fees for the payments don't go to Visa or MasterCard. They stay in Brazil. The technology is in Brazil. The data centers are in Brazil. Brazil can, the US administration can sanction Brazil, but it's not going to affect their payment system. And resilience doesn't just come from a country having its own payment system. Where the data center matters. And we saw that earlier this week when a data center went down in the US and suddenly Lloyds Bank's customers can't make payments in the UK. That's why places like India and Saudi Arabia and China insist that any data center used for payments, any payments data stays within the country. And it's to protect them. So while we've done a bit of a trip around the world, we're now looking back at what we can learn for Scotland and how, if we had introduced a Scottish currency, what sort of payment systems we would need. Now, you need at least two payment systems. One is a high-value one, like CHAPS, for big movements of money, either between businesses in Scotland or connected to things like SWIFT for cross-border payments. You also need a day-to-day low-value payment system for domestic payments within Scotland. The high-value payment system would need to be able to connect to global payment systems such as SWIFT and possibly the Euro system. And it would need to be compatible with other systems worldwide. The scheme would need to follow the payment scheme formats that the G20 countries have introduced as part of the real-time cross-border payment initiative. So we just work with other countries and use the same formulas. This would be necessary to enable cross-border trade and the use of the Scottish currency in things like security settlement. However, given that any Scottish currency would not be a global reserve currency, high-value payments in the Scottish currency will primarily be made within Scotland for things like buying property and payments between Scottish businesses. The second would be an instant low-value payment system. Faster payments, PIX, UPI. And this will be for making payments between Scottish bank accounts. But when doing that, we can learn lessons from payment systems in other countries rather than just replicating what we do in the UK. We also need to decide whether to continue to use debit and credit cards supplied by American companies, embedded in digital wallets, supplied by Apple or Google or Samsung, or follow the examples of countries such as Brazil, India, and others, and use payments from bank accounts as the main payment of retail payments. This is something, incidentally, that many European countries are doing. And there is a couple of initiatives in the Eurozone to move from cards to bank payments. I would recommend using an example of PIX to reduce fees to retailers. Under PIX, retailers' fees are about 1% lower than the equivalent debit card payment. A debit card payment is the most common form of payment in the UK. We all use it as a day-to-day. But most of us just see this as a debit from our bank account. Have I got the money in the bank account? Yes, I can I can go and buy that. But consider it from a small shop in a Scottish high street, something with a £300,000 turnover. Those sort of shops, 10% profit margin, 30,000, that 1% reduction in fees on a £300,000 turnover is £3,000. So your profit increases by 10%. That's the sort of impact that PICS had in Brazil. And if you want to save the high streets, that's something we should look at here. And this is something that the Scottish Government could start to think about introducing today. How a business gets paid under the Payment Services Regulation is up to that business. You know, businesses accept cash, some businesses are card only, and the Scottish Government could introduce a system where instead of using a debit card or a credit card, we make bank-to-bank transfers, QR code, just on the phone. And you could do that for any place where you make a payment to the government, either nationally or in local government. And this is something that other countries have done. Korea has Zero Pay that does something similar. It reduces the cost of payments for small businesses, that example of the retail on the high street. And if we did that, if the Scottish Government did that, it could introduce that payment system by connecting from banks. They all have APIs under open banking. It's something that exists, and it's something that the HMRC have done to take tax payments. That will reduce payments, the cost of payments to the Scottish Government, to local councils, and it would have a payment system based in Scotland. So it would pay for itself. Take a couple of years, but it would pay for itself. What we could then do is start, and this is where you start to push how far you can go under the Scotland Act, is do you then make that available to businesses, small businesses in Scotland, businesses with turnovers of under £1 million, for example? Do you then introduce, to take the well-being example, an app so that people can start using money management in their council tax payments? Because you're getting all of that data, because you can then start cutting out the card networks, doing it internally within Scotland and building a payment system. Now, you wouldn't be able to do the final bit of the payment, the bit between banks, until there was the Scottish currency. But you can do a lot of the stuff before then. And you can do it in a way that helps the well-being of Scotland. Thank you. I don't know, have I got time for questions? Or?
Yes. Thank you very much, Peter. That was very insightful. And we have 5 minutes for questions. Starting at the back there, lady in the blue.
Perth Hub again. Adds one to go digital means that it can add 1% GDP. How much of that 1% GDP is actually because the off the books economy has to come on the books?
Because of that. It can also reduce costs to businesses, because if you put everything through, if you do everything on cash, you have to, if you want to produce accounting, you want to calculate taxes, there's a lot of manual work. What you can do is link your bank account, your accounting system, or your Excel, whatever you use, feed the payment straight in and do the calculations automatically, so you can reduce the cost of administration to business. There is also examples, I'm sure it doesn't happen in Scotland, in some countries, when you move to digital, it cuts out a lot of fraud. The example the IMF cite is when in 2009 the Afghan police started getting paid digitally before they'd been paid with notes. When that happened, most of the Afghan police started receiving 20% more in their pay packets than when they were being paid in cash. So some of it is fraud, and just money not being, taxes not being paid because everything is, online. There is also administration costs, and that 1% is a range of figures. It depends on where the economy is.
Tim, first.
Okay.
Okay, two quick questions. Internationally, for the geostrategic stuff, how long do you think it's going to take for the US to lose its sort of major position of control over the US dollar, well, over the world economy via the US dollar? And the other thing I would ask you is, when can you get started on the Scottish payment system?
So on the first, if you'd asked me a year ago, I would have said, "Oh, you're probably 20 years away." Given what's happened in the last year, I think it's not going to be an overnight thing, but you're seeing all of these small regional networks, and Southeast Asia is a really good example. That's why I use Thailand. The banks in that region are reducing the amount of money they have as US deposits, and that is impacting the value of the dollar because they're withdrawing money from dollars and putting it in Singapore dollars or Thai baht or Malaysian ringgits, because they do a lot of their trade cross-border. And they thought, well, why are we going to New York to do the cross-border settlement? We can just do it locally. And that's what's going to start happening, and it will be a gradual drift. I'd imagine it will be 10 years before there's a significant impact. And I think the US dollar will still be one of the big currencies. I don't think it's going to, suddenly going to go down to 20% like the euro, partly because, you'd have to replace it with something, and China is probably not a country that everyone else wants to be dependent on. On the Scottish payment system, it would need some political decisions to go ahead with it. The Scottish government does have a sort of a project to go on to build some payments, but it's based on BACS, and it's money going for a system to have a BACS bureau for local government payments for salaries and so on. That doesn't seem to be going very well because it seems to have taken 3 or 4 years, and they don't seem to have got very far. To implement a BACS system. I know I've done it. I was talking to Robbie Mockery yesterday. I did it with some credit unions. It takes a couple of months. You can get some software off the shelf and just go ahead with it and build a BACS bureau, and then you just port all the progressively port their local councils onto the Scottish BACS bureau, and should 2 years, but they you would need to have the political will to go ahead with it, and I don't see that at the moment.
One more question. Yeah, Kira?
I'm a councillor in Aberdeen, and I think the idea of the QR code sounds fantastic. Could we think about maybe having a pilot for that in Aberdeen? Can I get a meeting with the finance officer with you? Shall we get that organised?
Yeah, I can talk about it.
Do you think that the banks are going to kick back? They're not going to be happy if we do this kind of thing? Are we going to get some resistance from them?
Yeah, so the banks, as I said, the banks have the technology to do this. The banks aren't keen on it because they get money from issuing debit cards, and they get money on the fees for this. So they don't mind the HMRC because they couldn't really do anything about it, taking bank-to-bank payments. They also, you'll see pay by bank to pay off a credit card bill, and that the idea of pay by bank for making payments to a savings account. Again, the bank benefits because it doesn't pay the fees. And that's the way banks are looking at this at the moment, but you could do more. So you will get pushback from banks, so that's why there needs to be some political will to do that.
That's excellent, though. Thank you, Peter, and thank you, Karen. We didn't actually expect to do a sale online at the meeting, but sounds like we've got a proper initiative. It'd be great if that goes to a pilot phase. Sorry, John, you have your hand up.
I've got a question for you.
Yeah.
I deal with 3 or 4 different.
Make a quick one, John.
I deal with 3 or 4 different companies, like a hairdressers,
Yeah.
pub, club. They've now all started to put up cash is king things. What impact is that going to have?
They're probably doing it to avoid the fees I was just talking about. And if you gave them an alternative which didn't have the fees, I'm sure they'd be quite happy with that.
Well, personally, I don't like tap my card
Yeah.
when I go for a couple of
Yes.
pints, you know.
Yeah, I mean, the way people pay, if different people got different things, I mean, I started using, contactless, tapping my card when I was in a pub on a Friday night, and it was a bit busy, and, they really didn't want me to start, so they were quite keen for people to just tap and pay and, move on to the next customer. But, so, there is preferences. What I'm saying is there's alternatives out there, and Scotland should look beyond just what the UK is doing. What's happening in other countries? Can we learn from that? So, I think there's other
Thank you, Peter.
speakers, so I don't want to...
Thank you, Peter. Keen to move on.